Welcome back to Explain the Charts, where we break down the latest market movements, analyzing both the news and the technical data. Today, October 10th, we're diving deep into the EURUSD, unraveling the forces driving the euro's value against the US dollar. Recent headlines are painting a complex picture with conflicting signals about interest rate cuts and economic growth. The US dollar has been strengthening recently, driven by a resilient US economy and expectations of a more cautious, easing approach from the Fed. The Eurozone economy, on the other hand, is facing headwinds, with cooling inflation in Europe adding a bearish tone to the EURUSD. This week's key economic data releases include US GDP growth figures and EU Harmonized Index of Consumer Prices, HCP, inflation data, which will be crucial for traders to watch closely. A strong US CPI report could strengthen the USD, while a decline in core CPI could potentially drive a rebound in the EURUSD. With such a volatile market, it's essential to look at the technical data to identify key price levels and potential trend reversals. Let's begin with a look at the daily chart, covering a broader time frame to get a better understanding of the overall trend. Looking at the daily chart, we can see a clear downtrend in the EURUSD, with the price steadily declining from its peak in August. This downtrend is supported by a series of lower highs and lower lows. Currently, the price is trading near a key support level around 1.0900. If this level breaks, it could signal a further decline in the EURUSD. However, if the price manages to hold above 1.0900, it could indicate a potential shift in momentum. To get a clearer picture of the short-term trends, let's narrow down our view and examine the 1-hour chart. The 1-hour chart reveals a more volatile pattern, with shorter-term swings in both directions. We can see that the price has been consolidating between 1.0950 and 1.1000 in recent hours. This consolidation phase could be signaling a potential breakout in either direction. A break above 1.1000 would signal a bullish move, while a break below 1.0950 would indicate a bearish continuation. To gain further insights into the most immediate market movements, let's switch to the 15-minute chart. The 15-minute chart reveals even more detail, allowing us to see the fine-grained movements of the EURUSD. If we look at the recent candles, we can see a pattern of higher lows, which could be a sign of a potential bullish reversal. However, it's crucial to note that the price is still below the 1.0950 resistance level, which was a key support level in the past. A breakout above 1.0950 would significantly reinforce the bullish case, but until then, it's important to remain cautious. To further analyze the potential for a bullish reversal, let's zoom in on the last 48 hours of the 15-minute chart. Zooming in on the last 48 hours of the 15-minute chart, we can see the higher lows pattern more clearly. The price has tested the 1.0950 resistance level several times, but failed to break through. This repeated testing of the resistance level could be indicating a buildup of pressure, suggesting a potential breakout could be on the horizon. However, it's important to note that a break below the 1.0950 level could negate the bullish scenario. The key takeaway is that the EURUSD is currently at a pivotal point, with the potential for both bullish and bearish movements. Keep an eye on the 1.0950 resistance level, as a break above it could signal a strong bullish reversal. On the other hand, a break below the 1.0900 support level would solidify the bearish trend. Ultimately, the direction of the EURUSD will depend on the interplay of economic data, central bank actions, and market sentiment. In addition to the key price levels, traders should also pay attention to the following. 1. The US CPI data release, which could significantly impact the EURUSD. 2. The upcoming ECB monetary policy decision, which could provide further insights into the Eurozone's outlook. 3. The overall market sentiment, which is currently cautious due to geopolitical tensions and expectations of a more cautious, easing approach from the Fed. To recap, the EURUSD is currently at a crossroads, with the potential for both bullish and bearish movements. The 1.0950 resistance level is a crucial point to watch, as a break above it could signal a strong bullish reversal. Conversely, a break below the 1.0900 support level would solidify the bearish trend. Traders should remain vigilant and monitor key economic data releases, central bank actions, and market sentiment to make informed decisions. Stay tuned for further updates on the EURUSD as we continue to analyze the market and provide valuable insights.